Hello guys, welcome back. This is a video based on Module 2, Lesson 1, top-down analysis. And we will focus on finding your bias on the higher time frame, more specifically the weekly chart and the daily chart. Just a small example of how you could find your way on any market. So by the time you're done with this course, they can throw you on any financial market, futures, Bitcoin, Forex, and you would be able to find your way around the chart by doing top-down analysis and just finding your bias from these concepts that I'm teaching you. All right, so let's jump right into it. This is a software called Forex Tester 6. It is a Forex simulator. It simulates real-time data from the past years. You can see you might be a little bit confused as to why we're in 2019, but that is what this software allows you to do. Allows you to backtest and trade previous data. Therefore, you can collect information much faster than you would on a live market. So imagine you could just go to a live market and press play, and price just moves as fast as you want. You can control the speed. Price moves as fast as you want. Don't you think you'd be able to collect more information and just learn faster? So that's basically what a backtesting software allows you to do. All right, so let's jump right into it. I'm going to get my graphics panel, and I would be alternating between for the previous video, I used a trading view. I'd be alternating between that and this to sort of show you live market situations and then sort of show you theories about this trading strategy. Okay, so this is a weekly chart on the US dollar CAD 2019 chart. And right away, when I hop on my chart, right away, I can spot that price is in a bearish trend, moving downwards. But right now we see that it's in the middle of a bullish run. It might have gotten to the end after trading into this fair value gap right there. Right there, that fair value gap. So we sort of mark that out. I encourage every person that I've talked to about trading to always write. Don't be afraid to mark up your chart. Mark up the lines, mark up. It gives you a visual concept about what is going on in the market. So this is a weekly fair value gap. And as time goes on, I'll be introducing you to the colors that I use, my personal colors. You have your own later. For weekly chart, I like to use the orange to mark out fair value gaps and all the blocks and all that. So we see that price just traded right into this fair value gap. And we're trying to look for our bias. We traded right into that, respected the candle closes, meaning the bodies did not close above the fair value gap, indicating that price does want to go down. If it closes above it, you know that price is looking for higher liquidity to the upside. But you respected it and it gave us a very strong bearish reaction to the downside. So I'm going to grab my trend line. Grab my trend line right there. And boom, you can see right away we have a target, a swing low. From previous lessons, you understand what a swing low is and why it's a target. There's sell side liquidity resting there, and price is just going for it, going for sell side liquidity. Once it grabs it, it's going to react off of that and change directions, right? So right away, as simple as that, we know that price is just heading downward and we have a bias. It's that simple. Weekly, you can sell side liquidity, sell side liquidity. Always take your time to write on your chart. That way you're always guided. You know what everything is. Maybe this is too big. Let me change the font to something smaller. So 7. Okay. So weekly sell side liquidity right there. Price is heading for that. So that's basically it. That's what we have, because you see these candles, all these candles that you see here, they take a whole week to form. They take a whole week to form. So before price gets there, it's still gonna, it looks like a very, very short distance, but it's still going to take a while before it gets there. So right, let's hop on our daily chart. And this is basically what a top-down analysis. You when you're done with your weekly, you hop on the daily and you see what price is doing. I'm just gonna do this. I want to see everything. I want to see every single marking, every single text. All right. So price is sort of turning. Why is it turning? Because it's reacting off of this low that it grabbed. This low that did not exist on the weekly time frame. It's on a daily time frame, and you have to acknowledge it. You have to acknowledge it. And once again, you'll get to a point where you might not need to be doing this every single day, but as a beginner, even as a pro trader, you should be doing this. I still do this. I still do this, but if you, let's say you're in a hurry, you don't have time to mark, but yeah, still draw your lines, still make use of the trend lines. They are there for a reason. So right away, and let me just point that price typically moves in a certain fashion, right? When it's going down, when it's bearish, it moves this way, push, and then you get a pullback, and then a push again, and then a pullback. And in my previous video, in a previous video I made, I was talking about PD arrays, right? I was talking about PD arrays, and then how there is sort of like a levels called the premium to discount arrays, the premium to discount levels, right? So in this push right here, you can divide it into two areas, and that is the premium and the discount areas, right? The 50% of that is called the equilibrium. The 50% of that is called the equilibrium. It's called the equilibrium. So this top area is called premium. This top area is called premium. And then the bottom area of that array is called discount. At discount, what you want to do is buy. And when price gets to discount areas, when it pushes bearish, it gets to discount area, it can't just continue selling from that. That's not how price moves. Price has to move in a certain fashion. It has to sort of do certain things because it's controlled by an algorithm. So it has to do certain things before it continues to move. So when you're a discount and commodities are cheap, they are discounts. Traders or market makers, the bankers, the big players of the market, they are going to go for buys. They are going to intentionally push the market up into buy areas before it can sell again. So that's basically the secret behind this movement right here. This push and pull is just price moving from discount to premium, from premium to discount. On sales, when it's bearish, it goes from premium to discount, discount premium. When it's buying, it goes from discount to premium, premium to discount. So I hope you understand what I'm saying. I'm just gonna clear all this off right here. Clear this already. I'm going to remove drawings, so I take them out one by one. So right here, we see prices reacting off of this low. We grabbed sell side liquidity. It's moving, it's looking for more liquidity to move to the downside, but there is a big push and it has to pull at least to an area of premium before you can sell again. So it's going to do that by grabbing liquidity to liquidity, moving from highs to low, from fair value gaps to fair value gaps. So you have to just keep sort of tracking price before you move. Of course, you'll be controlled by days. This is a daily candle. This last bearish candle closed right here. That's how that day closed. So on lower time frames, you probably have little activity. But right now, we're waiting for the daily time frame, right? We see this formation, the daily candle, sorry. We see this formation right here. That is a swing low right there. If it only closed that way, if you met price this way on the daily chart, what would you think? Where's your bias? Well, we have narrative. It just swept this daily low right there. You need a reaction. We see a fair value gap. We mark that out. I'm just going to change. So on daily time frames, I like to use blue. And it's respecting it. It looks like it respected it. Nonetheless, I would still mark out this low, this high right here. This high right here. And also this low. Right there. So right away, the way price is looking makes this swing low right here. It does look like it's going up. Though there's liquidity to the upside, there's liquidity to the downside, but it does look like it's going up. That's my bias. I'll be taking, and again, all these things sort of come together. I did mention that after a push, there's a pullback. We see this liquidity to the upside. In fact, I'm going for the one at the top. I think price is going to go up. So I'm just going to play price forward, bar forward. Boom, it took that. It took that. So on that particular day, if you were looking for buys, you would be right. If all your confluences came together on lower time frames, you would have taken buys and you would have probably been, it would have been a winning trade. That is if you clicked, see all your confluences clicked. I will go over that on later lessons, all the things that you need to see before you take a trade. If you saw those on that day, that daily candle, you would be taking that. So that is sort of how you build your narrative and find your narrative. You sort of micro it down to candles using all these tools that you have, all this concept that you have. There's a big push right here. We saw it from the weekly. It went to the daily. We saw this big push, and after a push, because of how price moves, after a push, there should be a pullback. So that's why I went for the buy side liquidity as my bias, and that is what price took right there. So this is just a sort of small example to show you how we build narrative and and I repeat, on that day, if your bias is buy, you will be looking for, based on this candle, based on all the analysis that we just talked about, you'll be looking for buys on your smaller time frames. So I'll see you in the next lesson.